Alright, welcome back everyone. Let's not waste any time and get right into it. Wall Street ended August on a cautious note with stocks mixed as traders look ahead to a crucial US jobs report that could shape the Fed's next move. So the big question on investors' minds is, will the jobs report published next Friday show enough signs of cooling to confirm the market's expectations of a rate cut in September? If so, stocks could end the month on a firmer footing and head higher in the fourth quarter. But if the data disappoints, we may see some sharp profit-taking and stocks could pull back. So let's dive into the numbers. Turning to some of the key stocks movers, Nvidia eased 2.1%, giving back part of last week's 17% surge as traders locked in profits ahead of new data on Thursday. Chipmakers are expected to have their moment in the sun after Nvidia Corp wowed investors with better-than-expected earnings and an upbeat forecast last Wednesday. Investors are eager to see if other chipmakers like AMD and Qualcomm can match Nvidia's stellar performance during the earnings season. Tesla declined 3.5% after analysts at investment bank JP Morgan flagged weaker EV sales in Europe. Amazon and Alphabet held firm with steady demand for cloud and digital ads helping to support the Nasdaq. Energy names ExxonMobil and Chevron slipped as crude prices softened from recent highs. Now here's what you need to know about what's driving the markets, because this is important. Investors are positioning themselves cautiously ahead of next week's jobs report, which is seen as critical for confirming or challenging expectations of a September rate cut. A robust jobs market could bolster the case for the Fed to hold rates steady, while a softer report might increase the likelihood of a rate cut next month. Currently, markets are pricing in nearly an 85% chance of a quarter-point cut by the Federal Open Market Committee after a surprisingly strong July jobs report dashed hopes for a pause in the tightening cycle. However, sticky inflation data remains a headwind for those expecting an imminent easing of monetary policy. Speaking of inflation, yesterday we saw new data showing that core PCE prices rose 0.6% in July, matching the previous month and keeping the annual increase at 4.8%. Now this adds to a string of recent reports indicating that price pressures remain elevated, which means that a single month of soft jobs data may not be enough to convince the Fed to cut rates. In fact, Cleveland Fed President Loretta Master said today that the central bank will keep rates higher for longer if inflation does not show signs of slowing down. And she isn't alone. A slew of Fed officials have come out recently, pushing back against the market's rate cut bets and reiterating their commitment to keeping rates restrictive until inflation is convincingly defeated. Overseas markets ended the day mixed. In Europe, the FTSE 100 dipped 0.3% as investors locked in profits after the UK index hit a record high earlier in the week. Meanwhile, Germany's DAX edged up 0.2% bolstered by strong earnings from luxury car maker BMW. BMW shares jumped after it raised its full-year guidance, citing strong demand for its electric vehicles. Over in Asia, Japan's Nikkei rose 0.8% on chipmaker strength, while Chinese stocks stayed under pressure from weak signals for the world's second-largest economy. And that's all I got for you today. Do me a favor, drop a like on the video if you enjoyed it. Consider subscribing to Profit Path and make sure to visit our website for all the latest breaking news. Alright, thanks for watching and I'll see you back here tomorrow.